Hey, good morning, everybody. Welcome to another daily market report brought to you by Mike Bjork. Today is Monday, April 30th. Hope you all had a wonderful weekend. And this week we got a pretty big news coming up this week. We got the jobs week this week. So I'm prepared for some volatility this week, as basically Friday usually we have the jobs numbers, and that's gonna be the big week where what the investors going to really be watching for this week. But today we'll start off with the personal income for March numbers. February are up 0.3%. People remain about the same for zero point 0.3, and then actually jumped up to 0.4. So people got paid a little bit more, which is obviously a good sign. Consumer spending. So we got people earning now. Let's see what they're if they're spending more. We had a big month in February where it was zero point 0.9. We figured that was pretty big, so we'll just tamer it down a little bit, down to 0.4, and it dropped down to 0.3. So people are spending, but just not as much as they were anticipating a little bit. So, and then core PCE price index. What this is the inflation number. This is the Fed's favorite inflationary index, as its personal consumption expenditure stands for. Back in February, we had 0.1%. We figured it would go up about 0.2, and it did. So came in expectations, still tame numbers, nothing out of whack right there. And last but not least, Chicago PMI, which is the manufacturing area in the Chicago region. And so back in March, we had 62.2, which was kind of a little bit of a drop from the previous month. We figured it'd come down a little bit and actually dropped quite a bit. So that's obviously not a good sign, as I've been saying for the last couple weeks here. We do need to kind of watch, see if this is going to be a continuing trend, or if it's just going to be a blip and then go back up, or how we're going to play it out. So, but a few of these items here, like manufacturing and such, have taken a opposite direction here, so have kind of come down a little bit. So we'll just jump over to the headline news here. We just got a few items here. We got, of course, stock market's down a little bit today. But the biggie, I guess, would be Spain's officially their GDP numbers came out and basically officially put them into a recession for the first quarter. So they started the recessionary period. And also the S&P downgraded a bunch of their banks over there in Spain. So a lot of problems still continue in Spain. So let's see how this is all playing out on the bond market and where interest rates are moving. We did pull up a little bit on Friday, and then today we had a little bit of a gap and kind of closed it. Started the day up about 9 basis points, a little higher. Today we're kind of sitting on the top of the ceiling at the 103.81 level of the 3.5 Fannie Mae coupon here. So, So what that means is interest rates are a little bit better today. So obviously we got a little bit of improvement here. Again, this could send a sideways pattern until we hit jobs numbers on Friday, and they could break one way or the other way. If job numbers are good, I would look to see this interest rates go up. If job numbers come in bad, we could see potentially some improvement here. All right, folks, have a wonderful day. Stop on by Mike's Daily Market Report or mikesdailymarketreport.com and subscribe. Get your free daily emails reports emailed to you. Have a wonderful day. Bye bye.